Alright guys, so in today's video, I'm going to take you through my top 5 ICT concepts. These are the ones that have made me profitable. 3 are going to be related to price and 2 are going to be related to time. With that being said guys, let's get straight into this video.
We're going to have a look at today guys is from this price action segment here, and this is from Friday the 25th of October. This is an example of an A+ setup. This will occur multiple times a week. It doesn't have to be inside technically a silver bullet session, but we'll talk more about that as we go forward. Now the first thing I want to discuss is how do we phrase a trade using these concepts. We talked about the first being low resistance liquidity. Now I'm going to mark this out as relative equal highs or relative equal lows. See it as an accumulation pocket. That's the easiest way to see it. So these two highs here, relatively equal. We have this swing high here, it's very close by. So think of it as like stacked liquidity. The market wants to target liquidity, and these two swing highs have stacked liquidity, very, very close together, which is really important. Now from this point, you could also mark this out as an accumulation phase. So some would be classing this as a market make buy model. Accumulation comes down, pushes back up. Other people are going to call this the power 3. It's everything combined into one, right? But keep it nice and simple. That's what low resistance liquidity is, either an accumulation pocket or relative equal highs and relative equal lows.
Alright guys, concept number 2 is going to be optimal trade entry. So you're going to need to use your Fibonacci tool and find out where premium and discount is. Let's get into charts. Let me show you exactly what I mean.
And for this, you need to understand dealing ranges, where to draw the Fibonacci tool from and where to release it. So we're going to leave this in the charts, but I want you guys to highlight, even with, a circle, whatever it is, on your charts on this particular day. I want you to highlight all the major highs and lows in the 15-minute time frame. Those are the ones that I like to pull a Fibonacci on, especially if I'm playing the range. So what I'm going to do here is I'm going to grab a Fibonacci tool. See how this swing low sticks out, and then these swing highs are very close together. What I'm going to do, I'm going to anchor my fib from this swing low to the highest of those swing highs. So I'm going to go from this swing low to the highest of the swing highs, draw that across. Notice how we've got that low resistance, but notice how price is inside of this zone here. That's really important, right? So I'm trying to highlight where to take a trade from and now what to target, combining these two things. This is what to target. This is where to look for a trade. Not when yet, but where to look for a trade. So again, this is optimal trade entry zone. And then during that optimal trade entry zone, we're looking for key price signatures that tell us that the price may want to retrace or may want to reverse. And this brings me into the third element of price.
Concept number 3 is the use of an inversion fair value gap. Let's pair this with time. Let's pair this with a macro or silver bullet to phrase the highest probability setups using an inversion. Let's get straight into the charts.
So the third element of price that I want to look at is the inversion fair value gap. I'm going to mark out the inversion fair value gap with probably an orange box here. This candle's high, this candle's low, mark that across. It becomes inverted when this candle closes above, and we trade back into that here. So that's what I'm focusing on directly. Keep in mind guys, none of this means anything unless you've got the right time. Time and price means exactly what I'm illustrating here. Price, these are the most 3 important price elements that have made me profitable. Number 1 is the low resistance liquidity, equal highs, equal lows. Number 2 is understanding that when you're in a level of discount or below the halfway point, you're in a good position to buy. And when you're above the level of discount, you're in a good position to sell. If you're in the middle, it's half-half, and you're better off just waiting until price goes into premium or goes into discount. The last element is time, and there's 2 elements of time I want to talk about. One is silver bullet and one is a macro. Now, in the time frame here, you can't see silver bullet. We're about 7 o'clock in the morning, but what can you see where price pivots? What can you see where price pivots? I'm going to mark out the macro from 650 with one line here to 710. And what I want you guys to do is to have a look at when this pivot actually takes place. So 650 here to 710 there. Notice how the market runs into this zone, into optimal trade entry during the macro. But also during the macro, we start to offer these reversal patterns and this stalling in price. So we're not pairing price, we're pairing time, and simply we're using the inversion fair value gap to execute a trade. The way the mind should work here is simply as follows. Number 1, do we have low resistance liquidity? Tick it off, yes. Number 2, are we in optimal trade entry? Yes. Number 3, are we in a macro, and is the macro stalling or looking like it wants to reverse? Yes. Number 4 is waiting for that reversal pattern or reversal signature. In this case, it's an inversion fair value gap, but we're using what the previous macro has done. This could also occur during a silver bullet. It doesn't have to occur in a macro, but if you compare the two together, obviously it's even higher confidence and higher confluence. How would you execute this trade? Where would your stop loss go? A long position could come from here, stop loss going below the bodies of these candles, and simply targeting this low resistance liquidity. As you can see, guys, this move is extremely quick, and this is why these are the top 5 concepts that I've learned from ICT that have made me profitable. Quick moves, I know when to look for things and where to look for things, and most importantly, I know what to target.
So in this video, guys, I've shown you all the elements that you need to phrase a high probability trade and to build a profitable model using both time and price. I've shown you what to target, where to look for trades, when to look for trades, and most importantly, how to actually enter the trade itself. These are all the elements you need to phrase an entry model, and I've paired time and price. If you guys like this video, let me know. But until next time, I'll talk to you then. Peace.